So yeah, good morning, everyone. I hope that you've had a wonderful week up until now, and I hope to make your week even more wonderful. Right. So today will be, what we usually do during these live streams. Try to basically, predict price. Right. That's what we're trying to do as traders. Right. Shorten our, knowledge and introduce, new concepts. Right. If you guys can see, right, we have news at, at 10 a.m. this morning. So we'll get news in around 30 minutes. We'll more than likely be here for that. The news at 8:30, doesn't really do much, in my opinion, right? And I think that's due to the fact that we had, some type of volatility around the ASIN session in the, futures market, which is something that we'll be looking at. Not the futures market, the Forex market. All right, so the first thing that we'll be looking at today is the Forex market. So if you guys can recall, right, we had, this high right here annotated, right, and this low right here annotated as well. What was the, what do we have in the playbook? If price ran above this high, we would expect, lower prices or, price to, pull back within the range. But it's not only that it must run above this high. There must be, you already know what that is, sequential SMT, which there was, right? So we had sequential SMT between the previous quarter of the, monthly cycle. And you already know that Q4 is known for reversals, right? Q4 is known for reversals. That's why we have, all these expansions, right? Also, right, we had, remember what I said about, trading on Wednesday. We said that, Wednesday is better. It's going to be better than Tuesday, even though Wednesday does not have news events. So do you remember when I said that we would have, some type of volatility here, and it will definitely be better than Tuesday? And why is that? So it's something that, I would call delayed expansion or delayed protraction, right? But this has to do with the, engineered liquidity. So here, and this happened, and you got to be listening to this right now, because like it may seem as if, it's dry. It may seem as if, it doesn't make sense yet, but just stick with me, right? So news event here, right? We had news event when? Here, Tuesday, red folder news, right? Did we get any, we did not get that great, deal of volatility on Tuesday. When did we get it? Wednesday, right? We got it on Wednesday. Wednesday, we had price just expand to, our pool of liquidity, or, more importantly, the previous high, right, of the, previous quarter of the monthly cycle. The highs of the, monthly cycles quarters are important, very important. I'd say that they're more important than, almost everything. And this is due to the fact that when we have, like higher time frame market fluctuations, it's based on the monthly cycle, right? Most of it is based on the monthly cycle. Literally, you can, have a model just by, looking at the monthly cycle, and, that's how good it is. So we'll be, examining price right now. Remember, right? We anticipated this, right? And what did I said? Remember, I said that we wanted to see price run out above this high or below this low. But what happened? It ran above this high, right? And then collapsed. But interesting enough, right? This high right here, this candle right here, looking at the US dollar index, is a precision swing. So let's go back to the sequence. Whenever there is a bank holiday and you have a news event after the bank holiday, right? Look for the expansion, right? Which usually, will be targeting a major high, such as a, monthly, cycles, liquidity pool, or a weekly cycles liquidity pool. The news event, right, will, in my mind, just be delayed for Wednesday. So instead of, going in on Tuesday, because there's a bank holiday, look for the setup on Wednesday. And this is why, right, I was saying that you do not go into the market, the day after a bank holiday. You wait until Wednesday, right? Wednesday, Thursday, those days will be best, right? Those days will be best. So again, to recap, when you have a bank holiday and you have you have news event on Tuesday after the bank holiday on Monday, you skip Tuesday and expect what, should happen Tuesday and Wednesday. Am I clear? It should be clear. I know, it might be raffling some of your minds a bit, but that's fine. That's what we're here for. And we will, be seeing these things happen over and over again, right? Over and over and over again. And remember, and even now, right, the market is not, high probability at all. And why is this? Because, it's week 4, it's kind of high probability now. But before, when price was within this range, but, between this high and this low, like when prices around here, it was not high probability. But the draw on liquidity was this low. And for the US dollar, the draw on liquidity was this high. There is something, right, that, in my opinion, has more to do with, reversals in price than, more than anything else. And that is the sequential SMT, which occurs between the FX triad and the interest market triad. Right. So we'll look at that, quickly. So the market right here, which is, the one which caused the correcting correlation between the monthly cycle, right? So here you can see that the British pound is in a consolidating, market condition. That's what it's in right now. That doesn't mean that, you can't find a trade, but it just means that you don't want to be, holding on to moves like this, right? And, even looking at the euro, right? You don't want to be holding on to moves like that. So once you get, in below this low, if you manage to, price comes back into this gap right here, you know, more than likely be done, or, be done with most of your position. So the main thing, right, that we're trying to get instilled in your minds, right, for next month is making sure that you understand what causes price reversals, when price is likely to turn around, when price should be moving, and when price should not be moving. Here, right, and let me use this, right, here, right, this is the high of Q3. This is the high of Q3. And yes, we're referencing to the monthly cycle for those, who don't know. This is the high of Q3, right? And we'll go over to look at the monthly cycle for the index futures chart. It's insane how much the Dow has dropped. So originally, right, for the NASDAQ, we wanted to see, sequential SMT here, which we did see, right? But what type of sequential SMT was here? Hidden sequential SMT. That's correct, right? So we had this candle close above this one here, right? And this is a way to, confirm sequential SMT. And we had this one closing below this one, right? So we want to see price push above, this high, this open, but I was, more inclined to see price push above this high than, come back within the range. And I'll tell you why, I expected weakness. And, we did get that. Right. So here, and this is important. I didn't even want to talk about this, right? But this is important. Right. Sequences. You always hear people talking about sequences. Right. So you can see that, and now we're focusing on the S&P 500 and NASDAQ, right? Not really focusing on the Dow right now, right? We will in a second, but not right now. So we can change the Dow right here to GU, right? Here, you can see that we had intermarket sequential S&P, right? This, right here is, basically, what gave validity to this hidden market sequential SMT right here, if you understand what I'm saying. So this here was high probability, right? This here was, really as, high probability as, things can get. So we had the British pound taking out the previous quarter's high. The NASDAQ failed taking out the previous quarter's high, but, went above and closed above the previous quarter's highest close. So we had hidden sequential SMT right here, right? Here, we had not at all, the S&P 500 failed to trade above the high and failed to trade above and close above the previous quarter's highest close of the previous quarter. All while, doing all of this around, new week opening gaps, which aren't, that important if you already have this, right? So why did we expect weakness? We expected, some type of fluctuation, above price, and then, why did we expect price to drop after that? Why? This, was due to the fact that we already had the, that fall. And this is actually a sequence, right? This is a sequence in, which price moves. And, right, it's very important for you to write this down right now, because this is like the gem of the, session, right? So even when I, get this and I post it afterwards, what will happen is I won't be talking about this, right? So you need to watch this to get it, right? I won't be putting it on the title or, because, I don't want someone that's not studying, someone that's not here, someone that's not listening to just take this information and, run along with it. So you need to be listening right now. You need to be writing right now. And, only those of you who are paying attention will get this, right? So we had the Dow trending, right, in just a direction by itself, just dropping, right? Whenever we see the Dow out of sync with the S&P 500 and the NASDAQ, right, we can expect, right, and this is important, we can expect, right, the S&P 500 and the NASDAQ to try to get in tune or try to follow the rhythm of the Dow. Have you ever realized that? Yes, you have, but you never looked at it like that before, right? So, for example, right, and you can look at the crosshair right now. Here, right, we had the Dow, dropping tremendously, right? While we were having, the NASDAQ being stuck in premium. While we were having the S&P 500 being stuck in premium, where was the Dow? The Dow was in discount. So the S&P 500 and NASDAQ will, recalibrate themselves to match, the Dow in terms of premium and discount. And this is why we, saw such weakness in regards to the S&P 500, and this is why we saw the drop in price from the NASDAQ. If you guys remember what I said, right? Literally, this is what I said. I did not say, right, we're going to keep going higher and higher and higher and higher and higher. I said that, right, whenever we see SMT of, any sort which we have talked about, we will expect, price to reverse. We will expect price to drop. And that's what we saw happen, right? Price did what? It dropped. Why did I expect that? Because the Dow was already dropping. In these cases, when the Dow is, right, this actually makes it easier to read price. So when you have the Dow just, doing its thing, all you have to do is look for, SSMT or IM SSMT to push price or point price in the same direction in which the Dow is already going. And this is important. No one's going to talk about this because no one knows about this. And right, you need to just, see it to literally believe it, right? And this is why we don't, talk about hindsight data like that, right? We try to anticipate the market conditions using the concepts, right, in the most simplistic way possible, a way which, allows you to focus on what I'm talking about, right? Right now, I don't have, but, there will be times when we introduce, some new PD arrays where, we will have a lot of lipstick on the chart, but now it's about time. It's not about, this gap right here. It's about time, right? That's the most important part. You should be focused on this, right? Side of the chart, the bottom, not the sides, right? So whenever you have the Dow in discount, NASDAQ in premium, and the S&P 500 in premium, expect the S&P 500 and the NASDAQ to join the Dow in discount after there is sequential S&P. Just expect that. If you have questions, backtesting will answer those questions. You go in there and you'll see a real wow. It's there, right? It's literally been there and it's always been there. If, right, you ever see the Dow, right, literally you just see the Dow start, exploding out of nowhere, and the NASDAQ stays still, and the S&P 500 stays still, what would we expect after? That would be, easy, because why? The most explosive moves happen whenever the Dow is out of sync with everything else, right? That's when you have the most explosive moves, and if you understand what's happening, that's when you have, the most high probability trades, right? Very, important. Also, there's something, which, as I said, when I was beginning, I believe that I wasn't recording this yet, right? Something that, just doesn't sit right with me is the, the tension that's, happening with China and Taiwan. So, here's the gist of it, right? Tell me if this makes sense to you. So Taiwan produces, right, I would say 90% of the, technology, semiconductors that the US consumes, right? China is over there, around Taiwan, just, I'm pretty sure they already know which date they're going to, invade Taiwan already. They're just like, I don't know what they're waiting for, to be honest. Not that, I want anything to happen, but it just has to happen. And it's not because of anything political. It's just because of what's in the charts. If you look at the, and if you look at NVIDIA, for example, and all, if not most of NVIDIA's, but most if not all of NVIDIA's, factories, and all the scientists, all the, technicians, which, make their product possible and as good as they are, they're located in Taiwan. Literally, all of them, right? NVIDIA is literally, literally accounts for, 40% of, the volume of, profit, liquidity within, stocks such as, Alphabet, and even Tesla uses their technology, right? So yeah, Microsoft, all of them, like literally. And that's why the stock market is where it is right now, because of Nvidia, right? Nvidia is the only thing holding up the stock market right now. And the only thing that, in my opinion, could cause Nvidia to fall would be what? China literally just stepping, on Taiwan's land, or as they say, I don't know, right? But none of this is random, right? And there are no coincidences. Okay, Nvidia happens to be going up all-time highs, and there needs to be a reason for it to reverse. Right? There needs to be a reason for it to reverse, and this is just the beginning of us talking about things like this. So we will be in the future, we'll be like anticipating things with a greater right the greater depth. But for now, this will do. So literally, keep like me, for example, I'm always, not like I'm totally interested in geopolitical conflicts, but like there has to be a reason why it's happening, right? There has to be a reason why it's happening. And then you have to remember that now, in regards to the progenitor cycle, which I am not sure if all of you understand, but you will understand soon. We are in a kill zone for events such as this. So yes, I won't, go into that any deeper. There might be people that don't hear stuff like that, but we have separate streams. And after this stream, we'll be back, and answer a few questions. And then that'll be it for now. Remember what I said about the Dow, the S&P 500, and the NASDAQ. It's very important, right? And you can do that also with the Great British Pound, right? Just put it in place of the Dow and, compare it to the euro dollar and the dollar index. So I'll be back. Q&A. Couple of seconds. Just, gonna close this and make the video render so we can, get it on. 1 second.